The NSE 20 share index declined 0.15 to close at 3808. That's roughly where it's been trading. So your assessment first of the market overall yesterday.
Well, as we usually see in the first few opening sessions of the week, first and second usually, market is usually slow. So I mean, what we saw was probably expected and very much within the levels of volatility.
Now, the market has seen some foreign trading and the percentage quite high yesterday. Who are these foreign traders, and is this unusual interest in the Kenyan market?
Well, for the past quarter or so, even probably half, we've been seeing quite a bit of foreign participation. Actually, you could argue the whole of this year, foreign participation has been what has been buoying trading in our market. So you could argue that they probably have more faith in us than we do in ourselves. So generally, if you look at the way the market has been moving up on a week-on-week basis, it's largely been driven by foreign investors.
Well, what particular shares are these foreign investors interested in?
Well, they're looking for large blue chips with liquid shares. EABL, KCB, Cooperative Bank, Mumias, Safaricom, those particularly look to be one of their picks.
Is the money coming there also, in your perception, as a result of problems in Europe? Do you see a correlation between the optimism in Europe or the pessimism in Europe and the search for better yields, better interest rates, better returns in African markets, and particularly yours?
I think that's one of the main issues, and for Kenya offered a unique opportunity, especially if you're looking at it from January to date, because we came from a season of high interest rates driven by high inflation rates, and the central bank seemed to get a handle on that. So anybody who was keen on the market would have seen that there was both on the currency front and on a yields basis, there was a lot of money to be made. So those who got in then have benefited. And the story is not over yet. There's still quite a bit of ground to be made up, especially with regards to inflation. Inflation can go lower towards a government target of 5%. That should bring down interest rates as well. And with that movement, you could see asset prices being buoyed as a result.
Well, and it's particular interest, you mentioned earlier a couple of the shares that the foreign investors are interested in, especially heavy interest in East African breweries, heavy trading there and dominated by foreign demand. Also in the context of the global brewing industry, where Heineken has just reported results, and not surprisingly that certainly their European market hasn't been very lively. But emerging markets, the growth story for breweries, still strong?
Still strong. Strong balance sheet there. They're about to announce, they should be announcing the results on Friday. Largely equity financed balance sheet. High returns on equity. You've got expansion opportunities within the larger East Africa, Tanzania. Perhaps you could argue that Uganda is not fully exploited. There's Ethiopia and South Sudan to the north. We don't know if Somalia will be a market, being largely Muslim, but all these opportunities place EABL uniquely to in terms of growth, and the management track record becomes a very interesting investment for investors, foreign investors especially.
Yeah. Are foreign investors informed on the Kenyan market? Because one gets the idea sometimes, particularly with developed market investors, that they know their own markets very well, but their homework on developing markets is not what it should be.
Well, we know it better because there's not too much research that has been done in the local markets. I was looking at some article on one of the published magazines from USA actually, and if you look at coverage for every stock, perhaps you'll get maybe 4 or 5 research reports, the regular research reports per company, whereas you've got about 14, 15 similar reports from their average stock abroad. So coverage is a bit lower. So perhaps they're not very confident with coverage. So they tend probably it's not very, they're not very sure how much confidence they could give to the report. So I guess all they could do is just come with I think they're flying. They feel as if they're flying blind. So yeah, well.
Yeah, well. A lack of knowledge suggests that there might be value opportunities which are being missed, which investors who do know about the market might be interested in. You mentioned Uganda a moment ago, and there's a power distributor there, Umeme, which is looking at a dual listing of shares in Uganda and Kenya.
Yeah, it'll be if they come onto the Nairobi Securities Exchange, it'll probably be the second distributor on our market, and that'd be very interesting for us. Because then now we can offer diversification opportunities for investors. However, what still concerns me, and probably is what would concern a European investor coming to the Kenyan market, is the Ugandan currency, with regards especially to stability. We've seen what Kenya went through. Uganda went through about the same thing. We know our central bank better, so we know how they would react. But data coming in from Uganda was a bit slow, so we didn't know what to expect from Uganda. But they seem to have managed inflation there. Ugandan shilling has stabilized, so I guess we could be facing the same challenges, or perhaps we could argue that theirs is probably a bit more exacerbated, being a step removed from Kenya, in that they depend on a bit on Kenya for the economy, in terms of the economy. So if Kenya sneezes, they probably catch a cold. So that would be a cause of concern for Kenyan investors. However, for those who invested, especially in companies like Stanbic Uganda, they made good returns. So I think there's opportunity worth exploiting there as well.